Hi, I'm John Goldschmidt, Head of Growth at Magenta Labs, and you're watching Taking Stock.
The risk-off trade back here in no uncertain terms here on Wall Street for this trading Wednesday, October 22nd. The sellers firmly in control after a few days of all-time highs. Investors somewhat taking a bit of a breather here, a bit of profit taking for the tail of the tape on this trading Wednesday. The S&P 500 expected to finish down about 0.6%, but we still have 90 seconds left in the trading session, and truly anything can happen. All of that sets the stage for a jam-packed show here today. Speaking of the show, welcome to it, one and all. This is Taking Stock. I'm your host today, J.D. Durkin, just moments away from the ringing of the one, the only, the truly iconic closing bell. We do it down here every day, folks, at the New York Stock Exchange. Today, the team from the Wisconsin School of Business is set to do the honors in just about a minute. Volatility very much catching a bid today. We did see the VIX spike back up to 20 for the first time since Monday's session. Down volume significantly outweighing up volume on the day. The great Peter Tuchman, the Einstein of Wall Street himself, he's on deck. He'll join us right after the close to give us his perspective on what he is seeing across the broader markets. The strongest performing sectors in the S&P 500 today include consumer staples, energy stocks, real estate stocks, while the laggards in the S&P 500, and there are a lot of them, unfortunately, for a day like today, technology, industrials, and telecom leading the losses to the downside. You hear the crowd. They're hyped up for the show as well as for the bell. The team from Wisconsin School of Business here now to do the honors. There you have it. We managed to keep the gavel in one piece today, which was not the case yesterday. The tail of the tape into the close for this Wednesday, October 22nd, my friends. The sellers firmly in control. The S&P 500 down 0.5%. The Dow Jones Industrial Average down 0.7. The New York Stock Exchange Composite Index down about 0.25%. And as is the case when the sellers dominate, the rotation to the small caps, the Russell 2000 bearing the worst of the selling today. The Russell 2000 down 1.4%. Let's bring in the one and only Peter Tuchman, senior trader at TradeMoss here at the New York Stock Exchange.
Sir.
My man, what are you seeing on this day when the sellers a bit louder than the buyers? What did you see into the close?
You know what we saw it was to buy all day long.
Yeah.
Right? Yeah, it was. And you know what? And that worked. So as you notice, like, yes, obviously we came off the highs of the day. Obviously there's a lot of, look, once you start to see a little bit of momentum on the sell side at all, obviously gold, you know, is headed to stay in the shade here, right? And that was a big 1.5 trillion taken out of that market, right? So, you know, there's a lot of curiosity going on, right, in the sort of the nooks and crannies of the market, right? Because you've seen them buy everything for a while, right? That irrational enthusiasm, buying equities, buying gold, buying Bitcoin, buying everything, right? Even in the eyes of a government shutdown, even in the eyes of, you know, of uncertainty around the economy and whatnot, right? And so, because normally, you know, gold is a hedge, right? So you would think when markets are going up, gold goes down. That's not been the case for a while. Gold's been on a tear. Then we haven't seen any kind of a break in the enthusiasm in this market at all. We've seen a couple of pullbacks, very shallow, right? And then, so today we did see, you know, the market opened up, but then it sort of started to, you know, there's obviously going to be a little bit of profit taking. There's a little bit of anxiety around the fact that even though Besson says that government shutdown is probably going to be over by week's end, you know, it's the bulls versus the bears, I mean, at that point. And so we hit a technical level around 2 o'clock, and that was sort of the low of the day. And we bounced beautifully off of that. We posted out, you know, almost a billion and change to buy, right? Market on close, and that kind of gave it a little bit of a nice, you know, it was a beautiful chart. If you look at the chart from, I know some people are seeing red and they're going, how can you call it beautiful? But if you're a chart reader, when you see it hit a technical level, it turns around and gets kind of swept up, you know, that kind of level, that's a good thing.
Yeah, we didn't see it close anywhere near session lows, to your
Not
point.
at
We saw
all.
a nice little bounce back after the
really
2 o'clock
nice
hour.
bounce
The meme stock speculation conversation, it's suddenly back in full force. You got the Beyond Meats of the world, the Krispy Kremes. Our friend Jay Woods calls it crispy meme. What do you make of the general speculative trade, whether it's, you know, some of the crypto assets, but the meme stocks, even if they're totally untethered from fundamentals, they are dominating at least a conversation on Wall Street.
We've got to be aware that there is a whole tranche of new players in the game, right? And part of them are the retail investors, part of them are just players, right? Those are the speculators, right? You see them, they've been a big part of the gold trade, right? There are a lot of people hopping on board that trade. You know, there are people who were buying gold at 1,800 and they were the forever bulls and they stayed there as it flatlined for years and years, and then they rode the wave. And then there are people who are going to buy, you know, the last ones into the party. Right now, they're probably not that happy because everyone said, you know, it's going to the moon, as we saw with the meme phenomenon back in the beginning, when GameStop went from, you know, bankrupt to $2 to $20 to 483 and right back down to 20, right? So the meme stock phenomenon is something that, you know, it's a bit of a game, you know, it's sort of gamification of the market. People are just watching the momentum. There's a momentum trade. If you're a day trader at all and you see people come into the market and then you've got a little bit of that algorithmic chase the VWAP, the volume weighted average, where everybody's just jumping on board, you know, you'll see that, you know, it'll get topped out and it'll pull back. I mean, I don't put a lot of, you know, onus on that. It's just, you know, it's literally people looking for something fun to do. You know, if you're a trader and you sort of did not want to play the short side of this market because that's been a painful one to trade, and you see, you know, gold get hits, you're not going to play in that game. Why don't we play a little bit of the meme stocks?
I got to say, now that we have at least one reference to VWAP, now it's officially a party here on Taking Stock, because that's the type of trading tacticals we love to get into. The great Einstein of Wall Street, the one and only Peter Tuchman, an institution inside this great institution. Peter, thank you as always for kicking off the broadcast with me.
Buddy.
I love you, buddy.
Good
Take
luck,
good care.
everybody. Happy trading.
Josh is going to happy trading one and all. Josh is going to take your mic. Howie, you and I are going to go for a walk. Excuse me, folks, we're going to pile right through here with the live show, and this is the part of the show where I try and practice my backwards walking. We now bring you an event contract up on Poly Market participants who are wondering what exactly will Jerome Powell say during his closely watched press conference. Remember, 1 week from today, we got the next FOMC meeting. These are actual odds up on Poly Market right now. Excuse me, one and all. What do you say, Sal? 77% chance in the eyes of Poly Market participants that Jerome Powell mentions inflation at least 40 times. That sounds like a lot, but he said it by my count 53 times last month. 56% chance Jerome Powell talks about AI. 27% chance he mentions stagflation. A 98% chance he says the phrase, good afternoon. That's an actual contract on Poly Market right now. Howie, we'll take a look at a few NYSE notables here on this Trading Wednesday. How about the team from Hilton having themselves one of the best performing days in the S&P 500? There's a lot of red on the big board. Not the case for Hilton. Not everyone cutting back on discretionary spending because luxury travel demand remains strong. If you're Hilton, that means some of your key brands like Conrad, as well as the Waldorf Astoria. The stock is trading right near all-time highs. Shares of Hilton still up 12% since the start of 2025. Howie, now we'll take a look here at shares of Walmart, up 0.8%. This is the third biggest company here at the New York Stock Exchange by market cap. Just secured this big deal with Beyond Meat to sell that product in more than 2,000 stores. The shares of Walmart still trading on the higher end of its 52-week range. Shares of Walmart up 20% year to date. They are set to report quarterly earnings next month on November 20th. All right, folks, FinTech TV's very own Vince Molinari sat down with Hub 71 CEO Ahmed Ali Alwan to discuss all of the ways that Hub 71 is building a vibrant community of both entrepreneurs and innovators in the great city of Abu Dhabi. Take a look.
Hi, I'd like to welcome a good friend, Ahmed Ali Alwan, who is the CEO of Hub 71. Ahmed, so great to see you. A little bit of role reversal. We were able to host you at the New York Stock Exchange on FinTech TV just a couple of weeks ago, and now you're graciously hosting us here at Hub 71. Thank you.
You're welcome. Thank you so much for being with us, Vince.
Well, it's our honor and privilege, and I want to jump right in. There is so much energy here. Hub 71, Impact 2025, all that's happening, the vibe that's coming out of the community that you created. Maybe just kick us off for a minute for our viewers who haven't heard about what you're doing and give us a little bit of framework of Hub 71.
You know, we're so excited to celebrate a community of founders, partners, and different individuals, all who had an important role to play in Hub 71's journey. We are an initiative that started in 2019, aimed to enable the tech ecosystem out of Abu Dhabi. We have different programs and initiatives that support startups across the journey. Our ultimate mission is to create an environment where these companies can grow and contribute to Abu Dhabi's non-oil GDP, but we're really focused on the earlier stage of the journey. For me, innovation and VC is synonymous with impact because these are companies that solve the real human problems through technology. So it's always fulfilling to be part of this story, and ultimately also fulfilling to see these companies grow and contribute to the fabric of the economy in Abu Dhabi. So fast forward today, we have a community of about 400 startups, more than 150 partners, all that have supported our mission, our journey. And it's great to see the level of attendance that we have at this impact event.
Well, it speaks volumes to walking the walk and talking the talk. I think year of community was a bit of the theme that I heard about. And it's really the essence where I believe it's maybe 60 countries are represented within the companies of Hub 71.
And in Abu Dhabi, there's more than 200 nationalities represented. But yes, our founders also, let's say, capture some of that, where we have more than 60 nationalities represented. And I'd say, yes, it's a year of community. We're saying in this event that community is the new capital because it's been such an intangible asset for us at Hub 71. And it's very important for us as we continue to grow and thrive, because these are founders, these are people with a shared mission, a shared struggle. They come here, set up in Abu Dhabi, and we work with them to build this community, nurture it, and continue to grow it. And I think one of the things I started realizing is the power of diversity. We have such a diverse community from sectors, from different ethnicities, all who have chosen to make Abu Dhabi home for their technology and innovation. And I hope you get to see it here in this event. Yani, it's such a wide, diverse set of people, but all who are bound by a shared vision and mission.
Well, it speaks volumes again, and seeing it, hearing it, some of the presentations from the startups today. And I want to pull on that thread a little bit of community as the new capital, because that seemed to be the essence of so much of what I heard today. And it is the diversity, the mosaic of what you've been weaving. And I think that comes through, that feels like that less intangibles than becoming tangibles as you move across community as capital, and people are valuing the wisdom of the crowd and really what you've created here.
Definitely. When I come, and it just comes from the founders themselves. I asked them, it's like, what's really I know it's interesting to say, but I get surprised by them. It's like, we love Hub 71, we love what you guys are doing. And I asked them, and my first question is like, why? Why do you like what we said? It's like, listen, one, you are such an attentive organization. We are a community or initiative that is proud to have been doing things for founders. So we listen to the founders intently, and that resonates with the people. And when you do that, you just attract the people from different parts of the world. And it has become, as you rightly mentioned, it has become such a fundamental asset to how we are growing, and we're excited to keep honing it.
Ahmet, congratulations to you, the Hub 71 team. The leadership continues. Always a pleasure to chat with you.
So much, man.
Thank you.
Let's do it, one and all. Welcome back to the broadcast. You're watching Taking Stock, still live from the trading floor of the iconic New York Stock Exchange. Time now for the latest headlines you need to know in the world of fintech, crypto, and AI. First up on a jam-packed edition of the show, the crypto majors of Bitcoin, Ethereum, Solana, all continuing to slide today as the U.S. dollar debasement trade came to a screeching halt. We talk a lot about that with Phil Rosen. We'll follow that story the next few days. Next up at this hour, in the real money AI crypto trading competition Alpha Arena, Alibaba's Qwen 3 Max is neck and neck with DeepSeek's Chat v3.1 as the best performing model. And finally, Google reportedly negotiating a new cloud computing deal worth tens of billions of dollars with AI startup Anthropic. All of this in an intentional bid to strengthen Google's position in the AI infrastructure race. FinTech TV's very own Remy Blair sat down with Dr. Mark Hendrick of Plus Therapeutics to discuss CNSide Diagnostics, is revolutionizing care for brain as well as CNS cancer. This is a crucial interview you do not want to miss. We bring it to you now. Take a look.
Welcome to FinTech TV. I'm Remy Blair. CNSide Diagnostics is on a mission to change the way that LM are diagnosed and managed. They use an innovative test called the CNSide assay platform, and the tech gives doctors better tools to make informed treatment decisions and is a big step forward in precision diagnostics for CNS cancers. And just recently, United Healthcare approved reimbursement for CNSide. Well, joining me today at the New York Stock Exchange is Dr. Mark Hedrick, President and CEO of Plus Therapeutic. Doctor, thank you so much for joining me.
Hi, Remy. Good morning.
Good morning. Well, first and foremost, for our audience, explain exactly what LM is.
So there's actually an epidemic of this thing called LM, or leptomeningeal metastases. And as doctors and healthcare providers, we're doing a better and better job taking care of patients with breast cancer, lung cancer, melanoma. And those survivals are getting better, but those cancer cells will escape the breast or escape the lung and get one or two cancer cells in the fluid around the brain. And patients, once they're diagnosed, live about 4 weeks without treatment. About half patients go to hospice. And then the ones that get treated are, it lasts maybe 4 months on average, but there are no approved drugs. So there's a problem therapeutically, but there's also a problem diagnostically. And so that's where CNSide comes in.
So tell us how what you're doing over at CNSide, the mission, how does it fit into the overall strategy over at Plus Therapeutics?
Yeah, so CNSide is a subsidiary of the parent company Plus Therapeutics. And so our sole mission in life is to bend the curve on survival for brain and central nervous system cancers. Why is that so critical? If you go back over 40 years, you take all cancers that aren't the brain and aren't the spinal cord, there's about a 300% improvement in survival. 40 years, everything's getting better except brain cancers and central nervous system cancers. The survival curves are flat. And so to bend that curve, what we're taking a novel approach. We're not doing the same way people did it for 4 years. We're throwing out the playbook and we're starting over. And basically we're building a tech agnostic company devoted to bend the curve.
And tell us a little bit more about the opportunity here at the New York Stock Exchange. We might focus on data in terms of what it means for investments, but when we're talking about something as crucial as healthcare, give us more insight into this.
But we have a targeted radiotherapeutic that's a drug that delivers all of its radiation to the tumor and then it's absorbed by the body. You don't get any untoward effects elsewhere in the body. Well, the delivery of that is very tech intensive, it's imaging intensive, and there are even there are models that are used to sort of figure out how to appropriately place that to get the best outcomes. That's a great opportunity for artificial intelligence and looking at data on imaging to improve the delivery. So now that's just for our drug for glioblastoma, which is the most common primary brain cancer. But for CNSide, the current let me give you a important comparator. So the current state of the art for diagnosing cancer cells in the fluid around the brain was first initiated in 1904. That's the competition. And so the one reason those survival curves are so flat for brain cancers is the diagnostics are poor. So CNSide collects a tremendous amount of data on this tumor cells that are there, what they express, what genes are turned on or turned off, what the overall genomic profile of the patient might be, whether they assess whether a particular drug might work or might not work. And so they suggest treatment pathways for patients and they help to monitor that treatment. So that's a tremendous amount of data coupled with other data we get from imaging and from our therapeutic.
Welcome back to the broadcast. You're watching Taking Stock. Now we'll bring you the latest headlines you need to know in the world of startups, raises, and rounds at this hour. First up, open source AI startup LangChain raising $125 million at a $1.25 billion valuation to build agentic AI systems. Next up, Oculus co-founder Brendan Uribe's new startup Sesame raising $250 million in order to launch its conversational AI smart glasses. And finally, California startup Seneca raising $60 million to launch AI-driven drones equipped with water cannons designed to extinguish wildfires. They truly think of everything. That's the latest you need to know in the world of startups, raises, and rounds. I am now joined by Professor Scott Baker. He's an associate professor of finance at the Wisconsin School of Business. They were just here to do the honors to ring the closing bell. Professor, welcome to the show and welcome to the New York Stock Exchange.
Thank you very much. Very happy to be here.
Your first time inside, if I'm not mistaken. What was the experience for you to be here on the trading floor and also be up here with your colleagues from Wisconsin ringing the bell?
It was fantastic. It's a great celebration of 125 years of the Wisconsin School of Business.
Absolutely. Talk to us more about the sorts of coverage and what you do as an associate producer. I'm going to hold that up here for you, if you don't mind.
Absolutely.
For what you do at Wisconsin.
Yeah, so I'm an associate professor of finance there. A very exciting time to be joining the finance department. They've been expanding a lot, the largest major there at the School of Business. And I study a lot of consumer choice and recently been seeing a lot of interesting kind of ability for retail investors to kind of diversify their portfolio across a lot of new types of assets, or if you want to call them assets. Things like polymarket prediction market bets or sports bets, cryptocurrency investments, derivatives trades, kind of all becoming a lot more accessible to retail investors, becoming a bigger part of a lot of their portfolios as well.
Scott, from where you're positioned, what do you think is really driving this surge of some more speculative investment out there in the marketplace?
Yeah, so this is, I think, driven a lot by just consumers and retail investors wanting to have some quick wins, wanting to get access to a lot of volatile investments that they can close out quickly. You see a huge surge in interest in assets or positions that are closing out in the hour, within the day. And I think there's a lot of emerging questions about the regulatory landscape. We've seen a huge amount of tie-ups between prediction markets and kind of gambling platforms, making deals with sports agencies, as well as derivatives exchanges. And I think regulators are maybe struggling a bit to try to catch up and think about what some of the implications for the households are.
How about implications on portfolios? I mean, I think all of us in this game, we've studied the long-term fundamentals, the great lessons of wisdom from the Warren Buffett to the world. It seems like a different conversation right now. And what does this mean for people in their portfolios from how you see it?
Absolutely. I think to the extent that people want risky investments, if anything, I'd rather have them picking random stocks and small cap stocks, which at least can earn a bit of a premium and kind of grow in the long run. Instead, it seems like we're turning a lot to these zero-sum bets from a lot of these prediction markets and sports bets and things like that. Might be harmful in the long run. I think regulators are going to have to take a page from some of the maybe gambling regulations that have been put in place in a lot of states.
Yeah, which leads us intuitively to the conversation on regulation. It's a whole different regulatory environment, at least down in Washington, D.C. so far here in 2025. How will you be looking to see how that landscape continues to evolve through the lens of a lot of these event contract platforms?
Yeah, so I think the CFTC has a lot of decisions to make about what sorts of contracts are going to be in the kind of social good. There's been past couple decades have been a quickly evolving regulatory landscape. And I think prediction markets have a lot to offer the economy, policymakers, regulators, people who are looking to hedge all sorts of different assets, and they need lots of trading volume to get these accurate prices. But I think it remains to be seen how beneficial they are to household portfolios in general.
Scott Baker is an associate professor of finance at the great University of Wisconsin. Go Badgers. You rock the Badgers
indeed.
Tie here today. You're welcome back anytime, Professor. It's
Thank
great
you
to
very
have you
much.
on the show today. Thanks a lot for being here. Folks, don't go anywhere. Much more Taking Stock coming up after a quick break, including the latest from Money 2020's Chief Strategy Officer, Scarlett Siebert. Don't go anywhere. More Taking Stock after this.
I'm Scarlett Sieber with Money 2020. Welcome back, and we're going to be here talking to you about prediction markets. I predict you are hearing a ton about prediction markets everywhere you turn right now. Left, right, it's all around us. I hear that there's a market being made right now on how many times I'll say market size on this segment. If you have not heard, ICE, the owner of the New York Stock Exchange, which is where we are right now, is either preparing to invest or has already invested $2 billion USD into Polymarket, the world's largest predictions market platform. This is one of those reading between the lines moments. Is ICE investing because maybe this will be a thing? Are they investing to ensure they didn't miss the boat? Or are they investing because prediction markets have potential to be even bigger than equity markets themselves in a decade or two? Let's break down what exactly these markets are, how they function, why ICE is stepping in, and how the business actually makes money. What is a prediction market? Is it as simple as it sounds? A prediction market is a marketplace where participants buy and sell contracts tied to the outcome of a future event. Elections, economic data releases, even pop culture or a sports event. Most contracts are binary, yes or no. They trade between $0 and $1. If the event happens, yes, it pays $1, otherwise it pays $0. Why are these prediction markets getting the ultimate blessing, i.e. the ICE knighthood? According to Reuters, ICE is now pushing to take a major stake up to $2 billion in Polymarket, valued at about $8 billion pre-money. There are also 8 billion opinions on that number, as I'm sure you could imagine. It's clear that ICE is not dabbling. It's going all in and moving first, playing offense. We will do a deeper dive on this report in our next segment as we start to untangle the future of the predictions market. In the meantime, that's it for now. There's a lot more to come. Back over to you on the floor.
Welcome back to the broadcast. With our remaining moment or so, we'll get you quickly caught up on a few of the top stocks for earnings we're covering. We are eagerly anticipating Tesla's investor call for Q3. That comes up at 5:30, though we are seeing shares of the auto giant down about 1.3% so far after pre-market. In terms of a preview for must-watch earnings tomorrow, Earnings Palooza back in full force. Tomorrow morning, we will hear from Southwest Airlines as well as American Airlines, see what they are seeing in terms of consumer spend at the close tomorrow. Alaska Air, Intel, as well as Ford. 9 a.m. tomorrow, NYSE TV Live and FinTech TV Live, both here at the NYSE, counting you down to the open. This is Taking Stock. That's going to do it, and we will see you tomorrow. Woo!